Good morning, ladies and gentlemen, and thank you for joining us in this asset class stage for what was, I'm confident to say, last year was one of the best sessions in the whole programme, so much so that we've got some people back again who were involved last year. So I'm delighted to be your chair for the morning. My name is Alex Note. I'm the Chief Executive of the Housing Forum in the UK, so really passionate about the whole of the living sector. And what we're here to do today is really dig into those kind of housing asset classes that are really, really so exciting for the real estate investment world now, and share some of the global best practice to tackling some of the universal challenges, but with really tailored local solutions. So thank you all for giving up on the sunshine, the welcome sunshine, to come into here. We will make it worth it. There's a really lovely cocktail afterwards as well, in the light and the sun. Just to get us going, we're going to do a little bit of live polling. 3 questions, partly because you're all digital natives, but just to make sure you're all awake and in the room. If you can just scan here, get your phones out, open the camera and get to that QR code. Look, see, all very skilled at this already. And there'll just be 3 questions to give us a sense of who's in the room and what your focuses are. So, super, can we go for the first one, please? So, what best describes your role in real estate? And you've got some options there. Oh, skip back again. Can we go back to the first one, please? There we go. So, developers, architect, investor, local authority, operator, advisor, so on. So there we go. Get a sense of who's in the room. This is very helpful because when we talk about living, we often say that there is a wall of capital coming, and given that we've got overwhelming levels of investors, this is true. Marvellous. Well done, everyone. So that gives us a great sense of who's in the room so far. Thank you. Let's go on to the next question, please. Which region are you most focused on for investments or your activity in general? And again, I'm sure you can see this, but for those who can't, Western Europe, Central and Eastern Europe, Nordics, North America, Latin America, Middle East and Africa, or Asia Pacific. Oh, we keep skipping. Let's skip back again, please. Oh. Slido's got the skips this morning. Okay, so overwhelmingly so far Western Europe, but it's coming. Okay, fine. Obviously some funny things going on here. Should we bother with the next one, Jessica? Should we crack on? It looks like we're just moving on. We'll move on. Okay, we're going to give them that. There we go. Technology's having a hiccup this morning. We'll go without it. But thank you for taking the time to get your phones out. That's brilliant. Where we're going to start this morning is with a fireside chat. We had a wonderful conversation last year with the Danish housing minister, which was really, really fun. She was going to come back and join us again this year, but obviously, as many of you will know, they've called some snap elections in Denmark, so the whole delegation understandably are focused on that and staying at home. But we have the fantastic joy of having Joy Cinderbrand here from New York City Public Housing Authority. So Joy, please do grab a seat, and you and I can have a little chat. Please do welcome us. Thank you. Grab the middle one. So, Joy, thank you. Just for those who aren't familiar with the city and how the public housing structure works, could you maybe just outline your role and what you cover?
The New York City Housing Authority is the largest landlord in North America and the largest public housing provider in New York City. We have about 178,000 apartment units in several thousand multifamily buildings. Most of these buildings were built in the 1930s, 40s, and 50s and have missed several rounds of reinvestment. So the capital need for our portfolio is currently at around $60 billion. And we have several ways that we're working to address that. Our households are very diverse, but many, about 45%, are run by seniors, which for us is over 62 years old. The average income is around $17,000 for households. So we're really dealing with a population that would otherwise be pushed out of New York City without the Public Housing Authority.
Great, thank you. And one of the areas that you cover is something called mandatory inclusionary housing. Can you just explain the terminology of what that is in a US context? Because affordable housing is treated in very different ways in different places, but in NYC it's got a specific...
Well, actually, let me clarify that I don't manage mandatory inclusionary housing. The New York City is a system It isn't one housing system. It's a set of imperfect systems that work together to try to really provide for New Yorkers opportunities for affordable living. And I think mandatory inclusionary housing, which started in 2016, is one of the best tools that we have. But I'll just start historically maybe and say, you all know what market rate housing is, so I don't have to describe that. That's been in New York the longest. The other legacy programs are rent control and rent stabilization. These cover about 25% of housing units, so maybe 40% of the rental market are under these programs, which are highly regulated, very restrictive in terms of rent increases. And then more recently, mandatory inclusionary housing is effectively a newer program where entire kind of swaths, neighborhoods in New York City were rezoned. And rezoning in New York is a long and complicated process. It had typically been done for particular projects or tax lots. In this case, the city started looking at neighborhoods that had the capacity in terms of transit and other public infrastructure for more density and rezone the entire neighborhoods. And in those neighborhoods, if you build anything with more than 10 units, you have a mandatory inclusion of certain levels of affordability. And this varies by development, but it means that that every single major project in New York City will now have some affordable units within it, and it'll be dispersed throughout the city instead of concentrated. And then the final piece is what my agency does, which is the Section 9 and Section 8 programs and providing public housing and voucher-based housing.
And that voucher-based housing is, I guess, that those most in need in the system. So is that fully subsidized, or is it proportional?
We're the waiting lists for public housing, or I guess you call it social housing, and the Section 8 voucher program are hundreds of thousands of people long, and that's only because we cut them off. If the waiting lists were not cut off, I don't know how long they would get. There's an inordinate need for affordable housing in New York City, both for the poor and very poor, but also for workforce housing, middle-class housing. Many of our residents at NYCHA are retirees. They worked for the city. They worked for NYCHA or our Department of Education or the police department, or they were bus drivers, and once they retire, their incomes are not rising as fast as the market is, and so it's really critical. And so where does the level of key worker or workforce housing fit into that? Because that seems to be kind of that tier that you're talking about. I want to make sure that we're using the term the same way. So when you say workforce housing, is there a band of income you're thinking of, or certain? So quite often in the UK, certainly that will usually be between about £20,000 and £45,000 income per annum. It'll be that rough, and it will be the teachers, the firefighters, the early police officers, that kind of key workers for a city. Absolutely, and we've had a lot of those types of workers. Really, the key people, the backbone of New York City, have to move farther and farther out in New York City. I think there's still some kind of bias where people imagine that Manhattan is the center of the universe in New York, but for better or worse, there are now many, many more neighborhoods in Brooklyn and Queens that have gotten about as expensive as Manhattan is. And so the benefit is there are more areas where people move when they come to New York or when they leave their parents' house if they grew up in New York like me, but there's also a growing number of areas that are within a really commutable distance that are now completely unaffordable unless you're in one of these programs, the rent stabilized or rent controlled or in public housing. The other parts of the neighborhood have been completely redeveloped and are now unaffordable. So you've outlined really clearly, the demand side is huge and overwhelming, and so there's new development trying to tackle that in a very dense city and find those elements. But you mentioned that the very large portfolio that you've already got under management, some of that older housing stock that you said missed a few rounds of funding. So you're kind of catching up on a retrofit cycle, I guess. Are you funding that in a different way? Is that all publicly funded, or has it got some private capital in there? Yeah, it's a mix. There's a panel tomorrow morning I'm giving on public-private partnerships if anybody wants to hear the longer story. But the shorter version for today is our funding is really mainly grants from the federal government, but more recently in the last decade, the city and the state have also started giving substantial amounts of money because the conditions just got so bad. In the last 5 years, we've been spending typically $1 billion to $1.5 billion a year. We have about $6.5 billion of active contracts in our 5-year capital plan. So we are doing a lot of work in-house. And there's, on top of that, we have discretionary grants, disaster recovery grants, whatever funding we can really muster. But we really have to leverage those dollars to be more effective. So energy performance contracts are one way that we've done that. And the other and the more significant way is through what's called Permanent Affordability Commitment Together, which is essentially a program that allows us to convert from Section 9, which is one federal program, to Section 8, which is a project-based voucher program. And that increases the amount of money we get for each unit, and it also takes us out of that political cycle. Our budget goes up and down every year. It's never enough, but it goes up and down. The project-based Section 8 program is a contract. It's a 20-year contract that by law has to be perpetually renewed. And so it allows us to have that more consistent stream of income that can turn into the financing you're talking about.
Right. And so you can then manage the responsive repairs and that ongoing operations in a more planned and effective way when you've got a less peaky budget, I guess.
Absolutely. And in this case, the way the program works is we partner with a developer, a nonprofit partner. They also have access to low-income housing tax credits, historic tax credits, other tools that we just don't have access to as a housing authority. And so they're able to put together a stack that lets them do the comprehensive modernization of the development. And that's been absolutely critical. We've completed about $5 billion worth of investment. Well, sorry, $5 billion worth of investment is either completed or in construction right now. And we have another maybe $17 billion that's in planning and different stages of the process.
So having your kind of affordable sector be, predominantly funded by heavy grant program is pretty standard, and it's very much the kind of common theme across many European countries, certainly. In the UK, what we've seen is a huge influx of private capital, really looking into social and affordable, and we distinguish those in the UK. The social housing is the kind of the government-mandated rent levels and the kind of rent-controlled units, and affordable can be kind of the wider bracket of maybe income assessed. But seen a lot of pension funds coming in, so 5 years ago, all the local government pension funds in the UK had under 1% of their allocations into housing in the UK, and it's now 19%. So there's been a really significant shift. Is that something you're seeing in New York or in the wider US market, or is it still quite? I mean, obviously it's grant dependent, but are you seeing any of that interest?
This is a little wider than my expertise, but I will say historically, the unions and organized labor in New York actually were very invested in housing, and there are entire developments that were constructed by union locals for their workers, which really, was part of that workforce housing base that was built in the 20th century. That has really moved from how they're spending their actual dollars, but in terms of their pensions, certainly they are interested, and their members are very, very interested in having, affordable units. The price of everything in New York has gone up so much that in the last 5 years, construction costs have gone up 60%, right? And we're talking, that includes sort of some of the aftermath of COVID, but there's been such an extreme increase in the cost of construction, the cost of land, the cost of labor. We're really struggling to keep up with that. And so, I mentioned rent stabilization. The tension there is really, we have this rent guidelines board. The members are appointed by the mayor. The pressure is always to keep any rent increases very low so that people are not displaced. But at the same time, the cost of maintaining the buildings they're living in has gone up so dramatically that property owners are struggling to replace the roof and replace the boiler. And so we really want to make sure both can be successful.
Yeah. So the quality of the housing needs to be maintained as well. Could you just quickly clarify the distinction between rent control and rent stabilization? How do those programs differ?
Sure. And it's probably not anything you'll ever talk about again, but rent control is a very historic program. These were buildings built in the 1940s, and it's a shrinking number of apartments. They only are considered rent-controlled if the resident has been living there consistently since, I think, 1971 or something like that. So it's really just sort of grandfathered in, and as people move out of those apartments, they roll into the rent stabilization program. The rent stabilization program, these are apartments that have an overlay of a set of rules on them from various financing programs that have occurred across the decades, and more recently from mandatory inclusionary housing. And there are tens of thousands of apartments that roll on and off every year. There's about 1 million apartments in this program. They roll off because they've hit a certain threshold of rent, or a certain type of improvements have been done on them. It's a very complex and regulated program, but it is a program that really keeps apartments affordable for a long period of time, which is what's important for us. Under mandatory inclusionary housing, those are permanently affordable, so those won't roll off at any point.
So then there's no covenant where they roll back into the kind of market rate. They'll stay affordable for it.
Yeah, they'll stay affordable. I mean, that's part of the sort of putting together the financing for that particular project is how affordable can you make this apartment, right? You can either cross-subsidize from the market rate rents, in which case maybe you can afford to make it workforce housing, but if you really want true affordability, which in our case is calculated off an area median income, the 20 or 40% affordability, you need subsidy. You need some kind of tax incentive, or you need some kind of city subsidy or voucher to really make that possible, or you need some of your pricing to be subsidized, like the land. Yeah. And so there's tools like that.
So regardless of where you are, it's the universal refrain to politicians, but subsidized housing needs subsidy, and it needs it on an ongoing basis. Joy, you will be chairing one of our interactive tables a little bit later, so anyone with particular questions they want to take to Joy will be able to do that. But in our last couple of minutes, I believe it's your first MIPIM. So, how are you finding it so far? What's the headlines for you?
Everybody's been so friendly. I've been really excited to be here. So I love New York. I live in New York. I've worked in New York most of my career. But I find that it's this kind of environment, really that mix of ideas, that mix of not just cities, states, and countries, but also sort of ways of thinking about problems that I find the cross-pollination really happens. So thank you for making me feel so welcome.
Fantastic. Well, Joy, it's such a joy to have you here. Thank you so much for the nominative determinism of your name and living up to it. It's brilliant. Please join me in thanking the wonderful Joy Cinderbrand for speaking to us this morning. Now we're going to move into our panel discussion. So I'd like to invite our wonderful panel to join the stage and ideally sit underneath their chairs, if they could. And I will slide over the other side. So we have got a really superb panel for you this morning. Loïc Bouchard, Fund and Portfolio Manager for Resi and Care at Swiss Life Asset Managers, based in France. Rafael Fernandez-Villaverde, Managing Director from Greystar for Southern Europe. Emma Long, Head of Business Strategy for Real Estate for L&G, that's legal in general. Ulrich von Reitz, CIO of Real Estate Europe for DWS. And Silvia Gomez, Business Director at Grupo AZK Empreendimentos. And I should say that Grupo AZK and Greystar have generously sponsored this session. So thank you guys for that as well. I'm actually going to stay here partly so I can see you all, because I'm too short if I sit down. If you like, Sylvia, if you want to, you can stop. That'd be fine. Thank you so much. But actually, Ulrich, I'm going to start with you if you'd like to grab a mic, since you are our returning panelist from last year. So thank you so much for coming back.
Great to be back. Yeah.
It's fab to have you. But last year, we talked a lot about the kind of hotspots that you were looking at and where you were seeing real potential. And we talked about Madrid and your affordable housing programs and the innovation they had and your investments there. So what are the hotspots you're looking at right now in Europe?
In Europe, it really remains to be mainly Spain is a fantastic place to be. We do invest in Denmark a lot. So unfortunately, the minister is not here yet, but we are working there as well to improve or increase the supply in housing. Of course, Germany, but what we really find a superb place to start building residential build-to-rent is Australia. Now, you asked for Europe, but...
no, that's great. We can go wider. We're global.
It's a global conference here, right? And so Australia, in our eyes, especially Sydney, is in a situation where London was 10 years ago. So in a place where traditionally people would live in their owned home, but that does not work for several reasons as well anymore, and they are now looking for a public rental sector, and they're built to rent. There is no institutional stock
Not really.
like there wasn't in London 10 years ago, so we believe that this is really a superb point of time to invest in Australia.
Yeah, fantastic. I mean, I've done quite a lot of work in Australia as their nascent build-to-rent sector was emerging, and I think as a Brit, one of the things that's always slightly frustrating is they go, oh yes, our system is based on your planning and your legal system, but we're a bit more entrepreneurial, so we just get on with it. So they definitely build a lot faster than maybe we do.
They build it faster, and it's much more fun to do the site visits. Right?
Yeah. Okay, I'll take you on a site visit in London and we'll see if we can do that. But okay, great. Thank you. Sylvia, welcome. You're bringing us a fresh perspective for the panel, Genuinely Global from South America, from Brazil. I think many in the room may not be so familiar with the market fundamentals there. So could you maybe give us a quick overview of that kind of market that you're working in?
Yes, Alex, thank you for the question. And Brazil, I'm from Brazil. Brazil represents 40% of the Latin America real estate market. Then it comes Mexico and Colombia, and the three of them represent 80% of the market. Okay, so I'll focus on Brazil because it's the largest one. And last year we sold 450,000 units. Meaning $60 billion in total sales, okay? There's a huge market in Brazil, and we have two main segments. The largest one in units, it's almost half of the units sold, represents the affordable market. And the other segment is the opposite one, is the luxury market. They are very resilient to the interest rate market that we have, because nowadays we are running in 15% per year in interest rates. So to finance this, the housing is really very expensive. Okay, so in the affordable market, what happens is that there's a federal bank who subsidizes the interest rate for the buyers. Okay, so this bank has access to very cheap funding due to a complex situation of savings account in Brazil. Okay, and in the luxury market, the buyers can afford the rates, and they finance for very short term. So it's not really a strong impact. So they are very resilient, and in between, there is also the middle market and the upscale market, middle market, okay? The branded residences, they are much more located in the luxury market. The luxury market is about 15% of total sales, $9 billion. And branded residences is a very new market for Brazilians. Brazilians are they are strong buyers of branded residences in Miami. And in Brazil, they are beginning to sell this kind of units, okay? So there is a challenge in Brazil to develop more the real estate market due to interest rates. And these two markets really are very strong right now because prices don't increase that much because of rates, and the financing is affordable for both of them.
Okay, great. Thank you for that overview. Really helpful. Loic, we're going to come back to continental Europe, and then so Swiss Life, your focus obviously is asset managers France, but are you investing more broadly? Or?
Yeah, exactly. So I'm from the division France, but still we are investing globally in Europe. So our main market are Switzerland for sure, Germany, and afterwards France. It's representing 22 billion. And our main focus are clearly BTR in France. We launched a JV with an operator and as well as with a promoter. So basically to develop affordable BTR scheme. As well, we want to expand a lot in co-living. We think that we can offer quite all-in rents, quite attractive for the market. So fighting as well against really high rents. When you compare like all-in rents with classical rents, it's quite good at the end. So basically, we really think that there is space to develop over there. But yes, really, affordability is one of our key focus. I was just reading some data, and you have some figures from Europe. 10% of the European household are spending more than 40% of their revenue in the rents. So really, there is a clear challenge over there, and especially for our portfolios, like vacancies is lower in those schemes. We get some subsidies from the states, but we cannot rely only on the states. We need stability to deploy capital. It's really important for us as institutional investor. So basically, we look forward to have a stabilized governmental environment in Europe, in France. So it will be one of the challenges for the years.
And you're highlighting there that universal theme when we talk about living or housing, which is affordability. And you're hinting that in France particularly, it's very highly regulated. Yeah. So when we're trying to explore some of these newer kind of asset classes, it can be maybe a little bit challenging?
Yeah, exactly. So in France, we have what we so-call the intermediary housing scheme, which is quite now famous and stabilized over the years because it's really dated from several years. And we heard the housing minister in France, they want to continue on that scheme. They a bit also enlarge the scheme to manage housing. So that's also good news for us, just to deploy new capital on that. And this affordability scheme is also bringing some governmentals and public money on table, which help also institutional investors as us to deploy more capital and to have support from the government. But still, it remains challenging in terms of returns and stability.
So blending any kind of grant with an investor in requiring a return and having the time frames to align and the hurdle rates, everything is tricky.
Tough work to align every component of the system. So we are working on it, and we have high expectation on the French market, but also on the other European market. But with a deep focus on the regulations across Europe, because it's really a key factor of success as well when you are talking about housing.
Okay, thank you, Luc. Emma, you give a quick overview. LNG are one of the largest living operators, so I'm not even going to attempt to give the overview, but maybe you can give the quick rundown.
Sure. So yes, LNG, for you who don't know us, also known as Legal & General. We are part of a wider insurance group in the UK, but we have a residential living platform that invests across build-to-rent, single family, student accommodation, PBSA, and affordable housing. We've got in the order of 20,000 front doors, we'd say, in the UK, so and multi-tenure. So for us, it's a huge area, obviously, of interest because of the dynamic we have in the UK around the housing supply. That's not unique, as we've just heard from everybody here. And our capital is very long-term capital. So we're investing not only on behalf of our own business, our own balance sheet, and our annuity business in particular, Solvency II capital that's looking to match out liabilities in the pension space, but also very much for, as you'd imagine, domestic capital, local government pension schemes, for example. But that is, I guess, the challenge is aligning that long-term capital, because these are very long-term investments, and you've got to believe that it's all about kind of access to the sector, but it's also about providing that inflation-linked income. That's the real attractive kind of point for us around this, and also obviously the impact piece around creating the supply. So some of our kind of principles have been really about we want to create supply. And that was sort of fundamental. So that's why we went into the build-to-rent market. You know, we wanted to create what wasn't there, and actually unlock housing, and also to give our occupiers, the people in the home, their homes, a more affordable way of living, and that's a sustainable way of living. So that's not just in terms of their kind of it's their total cost of living. So I think we're building housing stock that has the highest kind of energy credentials, so their all-in cost of living is not only about rent, it's about, you know, their bills and also their carbon impact. So. You know, lots of ambition around the sector, still lots to do, and we believe there's a lot to, you know, there's still a lot in the UK that we can work on unlocking.
And I think in the UK, for those in the room from our market, you know, the big word at the moment is viability. Just the sheer challenge of getting anything moving, build costs astronomical. So, you know, what are you doing to kind of tackle that and keep some motility in your market?
Yeah, so we think we still think we'll put to work about 500-600 million in build-to-rent sector this year. But where we're really finding that working is in London, where we've got the higher land values, and also what we've been able to make work for us unlocking is the fact that we are multi-tenure and we can do build-to-rent and we can do affordable, so we can look at sites where we can take on, you know, both the build-to-rent and also the kind of what we have in the UK is Section 106, kind of on larger certain scales of development, that you provide an element of affordable housing in different, again, that could be in different formats, could be in shared ownership, could be in kind of discount to market, could be in real, you know, pure kind of social housing. But we can operate across all of those. So that, for us, unlocks some sites where we're not necessarily the top bidder, but the fact is we de-risk that site for the vendor, the fact that we can take it all on. So that's allowed us to continue to progress, but it is very key. The other thing is, you know, some of the regulatory changes that have made this viability more challenging, and those are around, you know, safety measures and you know, not in any sense suggesting that those should be loosened, but it's about just making sure we can progress through meeting those you know, in a timely way and have certainty around those. Those are the kind of things that will help with viability, the being able to, again, de-risk and see where we can you know, work through, and the timing is known on some of those. So it is still possible, but it has been challenging. On the true affordable and the, you know, pure affordable housing side, obviously there's grant funding that the, you know, government bodies provide, and actually just came from, you know, breakfast this morning. We were talking about this, the National Housing Bank, National Housing.
The National Housing Bank, they're launching on the 1st of April.
Exactly. So lots of efforts to streamline, to be joined up, to make things flexible and work for different pots of capital coming in to deliver that stock. So lots of, again, positive momentum around the sector, but, you know, purely build costs have been challenging. You can, you know, you can buy up and built BTR for less than replacement costs. So that is a real challenge for the market at the moment.
Okay, thank you. I'll continue in a second. But Raphael, welcome. So Greystar is another vertically integrated kind of platform working across kind of global markets, but obviously you're looking across Southern Europe. So what's your focus area at the moment?
Yeah, so thank you for having me here. I joined Greystar 8 years ago. My focus has been in growing the European platform with a focus on Southern Europe across all living asset classes. We are a vertically integrated platform that combines investment, development, and operating capabilities effectively. Have grown a significant presence in Europe over the last decade, with applying all of the lessons learned that we bring from the US, having built, you know, invested and operated in the living asset class for the last 35 years. For us, the focus has most recently, or I'd say, has been affordability in student housing and obviously build to rent, but also ensuring we, you know, tap into alternative housing solutions. In Spain, for instance, we own one of the largest flexible living accommodation portfolios and platforms that offer effectively all-inclusive, flexible housing solutions to mobile residents and a mobile demand. So that has been a clear focus for us. So yeah, happy to be here. Thanks for having me.
Great, thank you, Rafael. Ulrich, I'm going to come back to you because I was so excited to have you back again that I failed to give you an opportunity to outline what DWS does and the types of capital that you've got. So perhaps we should just revert back to that.
Maybe let me start this way. Why do investors like residential, right? And for us, residential remains to be the top pick when investing in Europe, closely followed by logistics, industrial, of course, like more or less everyone, but for good reason. And if you see these trends that people continue to want to live in metropolitan areas, and at the same time the space is somehow scarce, that leads to a supply-demand dynamics that is very favorable. And then we have discussed, of course, a lot about affordability, and that is a challenge, and regulation clearly is not at least not the only right answer to work on that. But if you just look at the fundamentals, living is just a fantastic sector to be in. And our investors are mainly pension funds, so it's a fiduciary business where we want to make sure that pensioners get some money back for the future. And this is something where we need to provide stable, good returns. And there, residential is part of the answer, what you can do.
Absolutely. So, it is a no-brainer when we look at the demand side, as you said, and the opportunity that when it's stabilised, it's so, it's so powerful. But it still provokes a real kind of risk aversion in a lot of investors, and that unfamiliarity. There's that nervousness around, the tenants and the communication, the risk of a social media kind of backlash if something is wrong. There's a real nervousness around that kind of thing. So how do you get people confident with living if they haven't come into it before, if they're trying to adjust from a more traditional CRE asset class?
I would say the perceived biggest risk is regulation. That you and then the social media, that you don't treat your tenants correctly, and then there's some shitstorm or so. That rarely happens. Maybe it's a UK thing, but
yeah, fine. Okay. That site visit I was going to take you on has just got less nice, just so you know.
But of course, you must know the regulation in each market. And if you have a diversification across different regulatory systems, you can actually take advantage of regulation. That does not always happen, but there are certain aspects in regulation where you can actually have a chance through investments in the asset to increase the rent, where across the board that's not possible anymore. So that's the perceived biggest risk. And to me, diversification, for instance, across Europe is the best answer to it. Of course, everyone here in the industry claims that they know the market and they understand regulation and they have the right people on the ground. Yes, that is something that we do as well.
Okay. Does anyone want to come up with that idea that regulation can be an opportunity as well, as it can be an advantageous? Luke?
Yeah, it can be an advantage on some markets, but still you need to count on it for a very long time, because we know that regulation has changing a lot, and the political times is not the investor time. So basically, we have, like at Swiss Life, a long-term vision. So basically, we need to align the returns that we want to achieve with our strategy, and so we cannot count only on the regulations. We need to see our convictions. So basically, that's why we move a bit from the classical residential to BTR, more adapted to the new way of living that we see across Europe, because you see that we are living in less crowded places, in less larger flats, and so on. So we need to adapt as well the residential to that. And that's why also we want to invest more, and we already started to do it, into the alternative residential, because we think that it's adapted, and it's also a good combination with, to agree with you, Ulrich, pan-European scheme, pan-European investment strategy, on which you can play with regulations, returns on some parties, and also to local specificities, that it's quite something to take into account into our allocation strategy. So basically, that brings the full picture of what we need to consider doing in residential investments. But yeah, regulations can be a basis, but needs to be challenging.
For us, and I agree with all that, for us, I think regulation is not the problem. I think what the problem is unstable regulation.
Okay.
And
so it's the change and the uncertainty rather than the regulation.
Around, changing regulation to the extent developers, investors, operators can underwrite around the regulation and can, perceive a stable regulatory environment, then that will hopefully attract liquidity, and liquidity is good for everyone here. So it's not the regulation itself that worries us, it's the changing regulation and the uncertainty around it that we tend to stay away from.
Mm-hmm.
Yeah, I mean, I'd echo that, and maybe if we can go back to the reputation point, because that's a UK thing. But investors were concerned about it. They were concerned about it when we sort of first got into this market. They were very, very nervous about those bad news stories. But I think now, in particular, when you've got now these, that's the power of something like an institutional landlord, having those kind of integrated verticals, really owning what is going on in the buildings,
at every level.
Having that control. It provides that level of confidence. And, we just had to say, this is, there is a need. There is a need here we're trying to meet. We are a consumer-facing business. L&G is a consumer-facing business throughout the organisation. We deal with people at very vulnerable times, at points in their life, because we're an insurance company. We know how to deal with our vulnerable customers. And we just need to take responsibility for that. So, but that's where we really own what's going on throughout our, the chain, right down to that customer, that individual, and it's the homes. So, these are really emotive subjects, and we really try to put the person and the home at the centre of what we do. And I think that's, the really great thing about real estate and this industry and what we're doing is that people experience these buildings, and it's not just where you work, this is where you live, and having that human impact is so powerful. So, culturally, that our customers are at the heart of what we do, and that's not just our investor, that's the people living and working and doing all sorts of things in our buildings. And I think that's just really key not to forget, actually. That's what it's all about.
Absolutely. Before we dig into the kind of sub-asset classes that are on our tables, and we'll get into the interactive session shortly, I just want to address the kind of elephant in the room. We're talking a lot about that uncertainty and instability. Clearly, we're living in a time of really complex geopolitical tensions and huge uncertainty there. Yet, we are all here, and we're all having conversations, and we're all hoping things are moving on. Is there a way your businesses are kind of looking at that in the rearview mirror and acknowledging it, or is it just a kind of, it's so uncertain we just have to carry on? Is anyone willing to comment? Sylvia?
Well, I think Brazil it's a heaven for you investors, okay? Because despite the fact that interest rates are very high, we have stable regulations to the residential market. Just because the construction sector, it's a very powerful engine for the government to generate jobs, and we have a very high residential deficit. So if you are really insecure about Europe, you can come to Latin America in Brazil. I can help you to do that.
Okay. So that's option one. Ulrich.
Again, for the site visits, I'd love to come. But frankly, we're currently seeing too much risk in the whole Latin American market. You referred probably to general political...
Yeah, just the wider geopolitical tensions and
situation. Every time we come to MIPIM, something bad happens, yeah? Not for me as a German, now on top the Lufthansa strike, but okay. Yes, it does affect the real estate market, and of course with that it will affect the residential market. But if you think in relative terms, we can't change what is going on. And if you think in relative terms, when have you heard last time doubts about the valuation of equity markets? Have you heard about a tech bubble, an AI bubble? I guess so. Probably you discuss this every day. And have you in the past 6-12 months discussed that real estate values are too high? So I would really say that we are on a relative basis in a great spot currently. If things go well, and like Trump says, the war's over in a few days, good for all of us, and I'm fully in favor. If instability continues, I surely want to be in real estate markets opposed to stock markets. And I think this is something that we could all take away from MIPIM, that there's this great reaffirmation that we are on the right spot, that we're doing the right thing. Being on the real estate market in times like these is actually a good thing. So it will, of course, uncertainty, instability, maybe that has a growth impact. That's not good for real estate. But surely on a relative basis, we are in a good spot.
Thank you. Anyone else want to comment on that? Or would prefer not to?
So I agree with all that. Thankfully, we're not... I think none of us are stock pickers, and we invest in real estate that should hopefully provide a hedge against this kind of volatility, right? So we're more thankfully. It will obviously have, if the conflict that we're currently seeing is sustained longer term, that'll have, I think, implications on inflation, for instance. And thankfully, this is Housing Forum, but housing, as you all know, is the asset class to hedge against inflation hedges and kind of inflation spikes. And hopefully that'll provide some downside protection. I think obviously the financing markets is something that we're closely tracking that might potentially have some impacts on short and midterm interest rates. We're already thinking about potential hikes in the short term. And what that will potentially also impact is exit cap rates, expected returns, cost of capital. Again, that is in a worst case scenario where the volatility and the current conflict is sustained. But again, thankfully, we're not stock pickers, and we invest in housing, we invest in real estate. That should hopefully, stay away from that noise, albeit we obviously monitor it.
Okay, thank you, Raphael. Okay, let's move on into looking into some of the sort of sub-asset classes that we've got in this living umbrella, which is obviously the place to be. So, Loic, we're talking maybe about co-living with you. It's a really popular topic of discussion at MIPIM. It has been for a few years, but it's got some myths around it as well. There's not maybe always clarity in what it means. So what do you mean by co-living when you're exploring it?
Yeah, so exactly, there is quite some myths about it. Especially, we had a couple of discussions a couple of years ago. Really, a lot of people were wondering what is co-living, how it differentiates from other subsectors, because there is also often the mismatch with student housing, because most of the people think that co-living are for students. But we have invested into a co-living platform in the UK called True North. And clearly, we see that the demography in our residents are really young workers. I think that it's around 70% are between 26 and 40 years, so really not students. So co-living, we really see that as a building scheme that offer common areas, nicely furbished, with a lot of events, really for building a communities. Really, we thought at Swiss Life that communities is the key point for the residential. We saw that the loneliness is spreading really over the society, especially it is spreading across the ages. So it's you can be lonely during your study, as well as especially when you are in the later stage. So basically, it's really building a community in the nicely built building, built for a purpose, co-living, and yes, with an operational excellence. We, as operator in the UK, but as investor in the rest of the Europe, put really the accent on the operation side. So we one of the key factors of success of a co-living scheme is to find a good operator, aligned with our values, aligned with our strategy, and align on how you operate the scheme. And one of the key factors of success is digitalization, because those people living in the co-living can be digital nomads, people born with a laptop and a smartphone, so everything is going through that, and you are also saving times, have happier tenants, which is also something really good to maintain a good level of occupancy of our residents. So it's really really a network, I would say, between the investor, the operator, and the tenant that make the co-living happen. And we saw it as no longer a niche, but really an asset class that it will become like traditional housing, bigger and bigger on the market. We saw the figures on the UK side, which is quite impressive, and in France is coming as well, is booming, as well as in Spain. So really a good focus on co-living, and a lot of things to do on these sub-asset classes.
And certainly the challenge in the UK has been that in terms of the regulation around space standards and minimum space standards, making it very difficult when you're then trying to point at, a shared house with somebody living in very poor quality space, but is permitted versus a well-designed smaller unit for co-living. So is that something you're experiencing in Paris as well?
Yeah, exactly. But in Paris, we have a regulation from the number of square meter minimum required for housing. So we want to offer more than that because it's only 9 square meters. So really, really small. But still, there is some discussion, like in Paris, regarding co-living, or what we call co-living, because authorities have different view on that. But yeah, okay. I mean, putting that all together is really something key. Like the operations of those type of assets is really dense, because we have much more tenants, much more apartments. So really, it's really something really hard to do for the operators, and we really need to think the building for that on purpose directly. Yep. And there is also one point that is really important. It's environmental standards, because we also give back some money to the tenants, like by saving on the heating system, so stuff like that. So it's also bringing some affordability, even on a scheme that is not foreseen as affordable.
So again, those all-in rents versus traditional rents do make a big difference. Okay, thank you. Emma, coming to you, what are the opportunities and challenges of balancing portfolios of specialists versus sort of generalist opportunities? So, is it possible to run a PBSA student platform with the same kind of background as a retirement living kind of care setting, or do you need something in a silo for each type?
Yeah, I think there's maybe a couple of different ways of kind of looking at that, because I think, again, to kind of go back to the message about the human aspect of these buildings, you are very different kind of customers that you've got on those different stages. So I think there's definitely a need to have a tailored approach to delivering to each of those segments. But I guess where we can think about what are the benefits of being a wider platform are, what are the commonalities, and they might be things around ESG. There might be, how do we deliver energy efficient buildings, the fabric? How do we procure as a business that's operating across all these sectors? What are the best practices around health and safety that we need to build in? So those are probably the places where we get the sort of operational efficiencies or learnings or best, and even actually being part of a platform that's working across commercial and hospitality in particular. We've seen, what are we learning from the hospitality sectors? And actually, these are, much more kind of amenity rich offerings versus in certain aspects around BTR, for example. What can we learn from the way that hospitality does things that we can translate into our BTR assets? We've got a SME kind of co-working operation that we run called Foundry. What are we learning there about the occupiers that we have in Foundry that might translate, because these are living individuals that are living in our BTR schemes, or again, the concierge type level of service there is very important. So it's really the learnings and the best practice that we're finding are the bits that translate across, rather than having a sort of one-size-fits-all operation on living.
Okay. Raphael, building on that, so Grace obviously hugely well known for being one of the largest, if not the largest operator of multifamily build-to-rent in the US. But one of the huge debates when it's come to kind of Europe and the UK has been that level of amenity and what is appropriate and is there one solution? So how do you guys approach that?
It's a great question, and we spend a lot of time thinking through that. For us, we obviously have a huge US business, and we operated in those markets for the last 35 years now. I think that the good thing about what we do and how we're set up across the globe is that we have global expertise, but also local leadership teams that understand the local demand and the local supply, and who understand effectively where the void is and where the opportunity sits. We in Europe have, and we said it before, but have been focusing on the affordability component of everything that we do. So ensuring you have a decent enough amenity space and community feeling to everything that we do is important. But obviously you need to be very mindful that in certain markets in Europe, the elasticity of the demand can be much higher than in other markets, and therefore over-speccing and over amenitizing an asset might go against you, and back to viability might even not make some of those projects viable. So it's, for us, the key is about obviously feeding from what we've learned elsewhere, but also ensuring that we apply those learnings in a way that effectively they adapt to the local demand and the local nuances. So we go very, not only country-specific analysis, but also, city-specific analysis as well.
Okay, that local context. Thank you. So, Sylvia, you mentioned that Grupo RSK are focused on branded residences. So what is the difference between a very highly amenitized multifamily built-to-rent apartment and a branded residence? What's the extra offer that you get?
Well, the branded residences is much more about the positioning of the product, and rather than a very different product. So if you sell an Armani building, it's because the Armani is the one who is really choosing the furniture, all the decorations, the common decorations, and they offer for the buyers. But it's much more about how the customer feel about the residences. And it's something very, very emerging markets, right? Because people really like to feel something that they have something important in their portfolio. And the branded residents, they are very good, actually, to attract the wealthy people in Brazil. Okay, but I think really that I've heard Emma and you telling about the community sense. This is much more important than everything else, because I think that real estate is really a way to go to to reach the people, and if the people see your product that something that they will live there and have life quality, they want to buy. Yeah. And the price is really something that they will pay the amount they feel they are getting. So in our group, Grupo RZK, we really like to create very large developments and new neighborhoods. So actually we are competing with a social project in the MIPIM category of mega urban development, that we are building a neighborhood with 40,000 people living there already, and we will build more places, and we will have 90,000 people living there in 150 buildings. Okay, but we delivered 2 parks, 6 schools, 3 small clinic to health to offer health to people, and retail around, so people can actually live there, have their children there, and work there. So there is really the sense of community. All the weekends, there are some activities around. There are a sports arena. So I think that it's really important. And it's an affordable housing. Okay, so it's not that difficult, really, to create dignity to people to live and to create this community sense. In the branded residence, it happens almost the same in a very different way, but people really feel that they are part of something else.
Yeah. I should say a declaration of interest, but I had the honour of being on the MIPIM Awards jury this year, and the project that Sylvia mentioned we had a lot of discussion with the jury. It was really fascinating to see the quality of the mix of offer that's been done for that community. So
yeah, and exciting. This is a public and private partnership because the government they buy the unit from us and they sell to the buyer, the final buyer, with 0 interest rates, only inflation. Okay, in 30, 40 years. So this is something that really get the people to have their own house instead of paying rents. And it's something that it's a life changer for people.
Yeah, absolutely.
Okay?
Absolutely. Thank you, Sylvia.
Yeah, and the project is called Reserva Raposo. If you have the opportunity to take a look, it's really very, very impacting.
And I think voting is still open, isn't it? So the awards are presented on Thursday.
Yes.
So you can all vote. Great. We'll just move on. Ulrich, I'll come to you. We've talked a lot. We're all here because we do believe in kind of sharing best practice and that you can translate learnings across different markets. But a lot of what we've talked about are kind of the learnings in the operational side. Are there lessons you can share in the kind of the investment models that we move across? And we've got such nuanced regulations in each kind of market, local context. Do you see something from the investor side that you can apply across different markets?
That's a good question. When we invest in residential, from an investment side, it is more or less always the same. So that is really not much. That's not even different when you compare that to a logistics or an office acquisition. Maybe coming again to great advantages of residential. We have experienced, especially in the last cycle, and we have several problems in the markets on the office side, where the life cycle of an asset is shortening. So sometimes, even after a 10-year lease, you need to again heavily invest in order to get the new lease term. And that's very specific of office, but I assume that that's somehow also in logistics. And we're discussing that if you go really to the prime end of the market, how much you need to invest ongoing, and that this really ruins your business case. And that's a big advantage of residential because given the supply-demand characteristics of this asset class, the life cycle of an asset is much longer. And given regulation, also in order to get a tenant at the right rent, you don't need to heavily invest. You don't need to give some benefits there because the rent is anyway regulated. So that is probably on the investment side somehow a difference, which makes residential again attractive. On the operational side, that of course is also an investment case, and then this is something that we actually have underestimated when we invest in operational assets, how important it is to get the right partner, the right operator, and how much work it is to really diligently choose the right partner there. And I have to say, if we look across Europe, there is not one size fits all solution. So in some countries we work with really boutique partners. In others we have really large partners. But this is something, when you talk about the investment side, which you must not underestimate. It's super important, and it's a lot of work, and it takes a lot of time to get to the right partner.
Yeah, absolutely. I always think, Emma, one of your colleagues, Dan Batterton, always used to say it took a while to realise as a fund manager that actually the person who probably had the most impact on his return was the cleaner in the hallways, and that person is
the person
really
on the front desk.
The person on the front desk
that notices who's coming in and who's not, or what's going on in the building. That is absolutely. So that's so fundamental, that interaction point. Yeah.
Yeah, absolutely. Thank you. We're moving into the last few minutes of the panel before we go into the breakouts, where you'll have a chance to interrogate this wonderful panel of experts even more. But I have a few more questions to throw at them. One of them is that in recent years at MIPIM and in the wider real estate industry, ESG sustainability has been very, very key at the top of the agenda. For various reasons, in some ways, it feels like maybe it's slipping off. It's certainly politically become, slightly more sensitive with kind of views from the US. But in other markets, I think we can see that it's just baked in. It's there already. So I'd just love to hear some from the panel's views on kind of whether ESG has slipped down the agenda or not. And then also just with that housing context, particularly where we heard from Joy about, and this is common in many markets, affordable housing portfolios that really need substantial retrofit, and how you make that work. So if either of those topics who'd like to jump in.
Yeah, I think for us it certainly hasn't slipped down the agenda. And for our investors, it hasn't slipped down the agenda, just to be clear on that. And actually, again, I was thinking about the reputational point. What we've seen is, the investors move from, in the early days of BTR emerging from how do I kind of sort of almost keep my name hidden in case there are any reputational issues, to now being very much, we want our names out there to say that we are part of delivering the solution. And ESG impact, very, 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 very high on the agenda. And it talked about for occupiers, it's about delivering to them this more sustainable way of living, which includes their cost of living, and energy bills are part of that. And we talked about geopolitical shocks and risks earlier. One of the things we can do around creating that kind of energy security is having homes that are more efficient, so that those cost shocks might be absorbed in slightly different ways. So there's a few different ways of thinking about it, but it's definitely not an agenda item.
I fully agree. It's baked in, and it is It's not that there is a discussion about getting higher energy standards into buildings, so it's just a given thing and part of every business plan. It's just part of it. Talking about residential, there of course is somehow a trade-off between the affordability and the maximizing the CO2, or minimizing, really maximizing the energy efficiency. And of course the costs of the last 5% of energy efficiency are super high and really make living unaffordable. And to me, what I see is that many participants and politicians have understood that. And we are getting new energy standards that are slightly lower, but really make a big difference in building costs.
Absolutely. Loic?
Yeah, I totally agree with what was said. For us, ESG is not a line that we can move on the agenda. It's one of the priority, especially that in the past we had a green premium when you had a really nice building in terms of environmental setup, but now it's more becoming a brown discount, let's say. If you have something that is not aligned to the market, so basically it's a must-have, and I totally agree with Eloise. The 5% to become the best in class is really hard to achieve, and the cost is really huge. And in the business plan, it's quite complicated to have it, but still the ESG standards we need to achieve is on the priority of the list, and especially also on the social area. We are talking about communities, and for us, we had specific indicators on the social ones. We have an impact fund to work on that as well. But really, social is creating communities and living better together. So yeah, we are focusing also on that in Swiss Life.
Okay, thank you. So, ladies and gentlemen, we've talked about regulation, that it can be the biggest challenge, but actually, as Ulrich said, it can be an opportunity if we frame it correctly. We've talked a lot about resilience and the need to kind of adapt and future-proof, and actually, for all of you, ESG and energy efficiency as a priority ultimately future-proofs and protects your return over the long term. So it's a no-brainer, it's baked in. That housing is the ultimate inflation hedge, Raphael, you took us through that, and that actually that's why we're all here, and that real estate, more than that, is the kind of the way to reach the people, Sylvia, that we talked about it, that it's not that difficult, but actually to do it really well is to care about the people in those homes, particularly in residential, regardless of whether it's a branded residence or an affordable home, but actually that quality of offer is something really important. But there's some really interesting lessons Raphael took us through in terms of the way you approach amenities and amenity light or fuller offer. So there's a huge amount to dig into for you guys in the tables in a moment, but before we do that, just one takeaway from all of you for guests here who are considering dipping their toe into living and kind of weighing up some of these different sub-asset classes. What would be your kind of tip, the way to approach it, the thing to keep in mind when you're looking at living as this new opportunity in all these different markets? What would you do as your takeaway, Sylvia?
My takeaway is about, well, I will repeat myself here, but I really think it's important, and we are doing this in our major projects. It's about creating the sense of ownership and community, a quality of life.
Great, thank you. Ulrich? Sorry.
I'm really looking forward to all these different operational discussions that we have. And so if the operational angle, and it goes pretty much to what you say, is getting increasingly important also for residential, and this is where great opportunities are.
Great, thank you. Emma?
Yeah, it's hard to sort of think of something, much different, really. But yeah, just go back to that human-centric piece, and as Alex mentioned, the people that it relates to the operational piece. Also, think about how the people in that building are experiencing it, and the people that you have working in that building, how are they experiencing it, and where are they getting their sense of kind of reward or incentive or pride, because that impact they have is so important. So it's just such a nuanced sector in terms of, we all get the supply-demand dynamic is, that the big macro picture is absolutely fundamentally makes sense. The actual nuance of delivering somewhere that someone lives successfully takes just a different kind of a mindset and getting into that level of detail. Yeah.
So the people focus is not just the tenants, it is also the staff. I think that's really key. Thank you. Raphael?
I agree with those ones. I'm not going to try to think anything different, but I think the operational complexities, do not underestimate the operational complexities of running a student housing project, a co-living asset, a residential scheme. As there is more and more capital piling up in the living space, it's going to become more competitive, and therefore, value will come from operational excellence. Value will come from sustained rental growth rather than yield compression. So we're not in a market where we can play around with yield compression. Alpha will come from operational experience and partnering with the right operator who has boots on the ground, the sales and marketing experience, and the brand positioning that you need to create value.
It's not something you can cut and paste. Absolutely. No. Thank you. And Luc, last quick word to you.
Just a key takeaway. So we are at the right spot, I think, on the residential side. And it's just finding the right balance between thinking globally as pan-European and taking into consideration as well the local specificities. That is quite key, and especially on the operation side, that is quite a key factor of success.
Thank you. So whether you call it residential, living, housing, homes, I think that big takeaway is we think global but act local. Don't try and cut and paste everything. Take those learnings but distill them and have that local context, that local lens. Thank you so much for being so candid and for covering such a lot of ground in our discussion. Please join me in thanking our wonderful panel. Thank you, guys. I don't let you out that easily. So we're now going into our interactive discussions. If you wish to move tables, that's fine. But we have table one, a build-to-rent table here, with Todd Marler, Senior Director for Multifamily Operations, leading, and some of our panellists will be joining table two. Table two is purpose-built student accommodation, which is here, thank you. Johan Alberg, Senior Director for Investment Nordics and Greystar. Table 3, branded residences here. Philippe Letrung from Views will be looking after you there. Table 4, co-living will be with Ulrich, so all the hard questions for him, definitely. We're going to be excellent. Table 5, later living with Tom Hartley, Managing Director at Carterwood Limited. And thank you. And table 6, affordable living with Joyce Cinderbrand over here. Over here. Super. So please do go, and we'll have some great interactive discussions. Thank you. I'm going to go a little bit rogue in my ordering of this, but actually I'm not going to go down here. Sorry, Joy. So we started with affordable housing. You had a lot of great people on your table. What were the headlines from your group that you want to feedback?
Well, we wound up doing a mini case study. We had participants at our table who are architects for a 520-hectare project near Lisbon. And it's going to be a multi-use space that's going to have a 30-year timeline to it. And so fortunately, the table also included people with a capital perspective. We had a politician. We had somebody who's developing affordable housing and somebody who's on the PR side. And so we did this mini case study to think about what this might look like in each of our contexts. I don't remember offhand how many countries were represented, but I believe it was 6. And so
we are global, so that's good.
Yeah.
We're going
so we're really, thinking about that early communication strategy to make sure you're building the momentum and including the public, front-loading some of the public benefits, whether it's infrastructure or amenities or the social housing or affordable housing, and then really thinking about the abatement of this. In this case, it's industrial and riverfront, so there's 2 real challenges. Abatement of the land, and then also accounting for climate hazards and climate change, since now this riverine property floods. So this was a really interesting way to think about affordable housing development in the larger context.
Amazing. And being here from the US, did you feel like it gave you a different context or something you hadn't heard before?
Actually, what I find so extraordinary is how much is universal.
It's the same. Yeah.
I mean, there's certainly local nuances to the financing and to the stakeholder engagement, but a lot of the challenges are really universal.
Amazing. Well, thank you so much for being here. Tom Hartley, Managing Director at Carterwood Limited. We didn't get much time to dig into later living on the panel, but clearly the appetite is there because you had the most people at your table. So, Tom, tell us, what did you guys cover?
Thank you. Yeah, we were really lucky to have a lot of experts on the table. It was interesting listening to the panel earlier. A lot of the discussion could have been applied to later living. And I think in terms of opportunity, if you don't have a later living strategy at the minute, I think you are potentially missing out on, one of the biggest demographic opportunities in our lifetime.
Absolutely.
We were lucky to have on our table examples of operators who are successfully operating schemes and those who are investing as well. Some of the key takeaways, the bit that really hit home was the operational expertise that's required in order to make these schemes successful, particularly when you're operating at different price points. We felt overall there was quite a big opportunity to brand exactly what we mean by later living. And we were focusing probably on the housing side in line with the panel today. So we were talking about housing,
as opposed to the care home, just to be clear. Yeah.
Housing for over 65s, houses and communities with services to support independent living. And we felt that definition between housing and care is a really helpful one, particularly when dealing with investors and how they think about those types of schemes. A couple of real challenges were around the branding, particularly, and affordability came up a lot as well. We're often dealing with those who in their 70s, 80s with relatively modest pensions, and finding a product that is good quality, ESG compliant, but can be serviced at 1,500 euros a month, something like that, is a really, really big challenge. But we were very clear the opportunity is huge if we can define the housing bit and the care bit to appeal to some of these guys on stage earlier.
Brilliant. Thank you so much, Tom.
If I may ask,
Go on then.
how did you discuss how to get these empty nesters into your smaller schemes? Because that was something that we discussed.
We did touch on that, and actually we were talking about the Netherlands as one example where there's an awful lot of education that's driven by government not only for preventative measures to delay the need for someone to move, but also about educating the population on the asset class, so that there's a familiarity and it's more culturally accepted that you might move from your main residence of 40 years into a different community at a later stage in life. But we see in the UK, for example, a huge amount of challenge getting people to move.
Okay, it's really culturally, and we have still 15 minutes.
Yeah, but I've got 3 other people. You can do this in the cocktail after, Ulrich. Come on. Honestly, I tried to be nice to you and you just go off on one. Come on.
So it's more culturally and not so much that there is the magic touch, how you get these older people move out of 200 square meters into 50.
I think culturally and educational. Does someone of 75 years old want to move into a senior living community? Probably not. Or an assisted living community. It doesn't sound particularly attractive. I think if we can get better education into the populations across Europe and wider, and if we can better define the asset class and what people are moving into and the benefits, I think we'll be more successful than we are.
Okay. You're going on the naughty chair, so you can wait. Right. Philippe, let's do branded residences. Tell us what you guys are doing.
I was very happy to attend the Ulrike conference. Thanks. No, just 4 key takeaways for me from a discussion at the table. The first one is that branded residence is not just the flavor of the month. It has the growth prospects are based on strong fundamentals. Obviously, wanted to touch the second point based on the business model. And thanks to Louis from Sales, he shares some numbers with us. So brand premium could be estimated, but it's a mixed bag in the 30%. And it could go up some market, and Morocco was quoted to 98%. But I think this number doesn't really define. What I learned from that discussion is that it's everybody, a lot of stakeholders in these schemes gain something. The people that sell the land get better value. The developer gets better margin. The brand gets fees, but also the owner, the buyer, gets if it's in a model with which mixes with an hotel, gets revenues and gets capital growth. So even with higher price, there is evidences that it's also create capital growth. So it's not kind of a zero-sum game.
Interesting.
That every thing goes in the pocket of the developer, which is normally good news for the developer. But so that for me that was quite impressive. And then what I get, I think the last point is the difficulty or the complexity compared to other residential scheme. It needs more skills, more planning, more capital. So looks very attractive, but maybe not for everybody.
Okay, so yeah, if you're really going for it, it's very resilient, but actually just getting there might require quite a bit.
Yes, it looks. I think if you don't plan well ahead, you will see your brand premium disappearing.
Okay. Well, that's a lesson for everyone in operational real estate. But yeah, thank you, Philippe. That's great. Johan, what about PBSA? What did you guys cover?
Yeah, we were a great team of people with expertise, both from an investor as well as an operator standpoint within PBSA. And luckily, we all agreed that that there's structural tailwinds within the market, which continue to make investment into the sector really interesting. However, there was some concern, similar to what was raised on the panel earlier around affordability, which I suppose we all agreed on making it more and more important to carefully consider the product offering and do more detailed analysis than potentially previously having been needed on what should be offered where and to whom. Similarly, to some extent also mentioned before, off the back of the sort of recent geopolitical uncertainty or unstable market that we're seeing, to some extent also consider the reliability on domestic versus international student demand.
Okay. And did you touch on anything about competing with BTR? You know, I know that in the US, kind of BTR came first and student came out of that, but certainly in the UK and much of Europe, we've had PBSA for a lot longer, and the evolution of more kind of multi-family built on has become quite competitive. Is that something you touched on?
We didn't actually, but yeah, that's a good point, and I think that that's something that you're seeing certainly in markets like the UK, which is a bit more mature when it comes to that type of sort of you know, high quality amenitized type of BTR type product, which to some extent is sometimes similar to student, which probably means that you know, the brand to some extent becomes more important, and kind of the community that you build around your assets. You know, I mean, you know, which caters to students specifically.
Okay.
But we didn't specifically touch upon that in the table.
It's all good. Thank you, Johan. That's great. Luke, thank you for stepping up, as Todd from Grissa wasn't able to join us. So thank you for taking charge of the Build to Rent table. What did you guys cover?
You're welcome. Yes, we had quite a good discussion with our expert on the table. So basically, we have a consensus that we have a huge shortage of housing across Europe. We mainly also discuss UK because the market is quite in advance compared to the size of the BTR in continental Europe. So really, the demand is there, shortage is there as well. There is clearly an opportunity from investor side, but also from developers, from municipality to have some quite impressive scheme, because you can deploy a lot of capitals and create really number of flats, even with one project, which is quite good to develop cities, areas, but still there is like concerns about where investment needs to occur. There is clearly like a focus in London, Manchester. In the UK, we see that, for example, France, it's also condensed in various regions, main regions. So that's also something to be noticed. And it's also like seen as a way to unlock some sites within the central area to transform some old buildings, old land that have been not used since long time to something new. And BTR is really one of the options because when political sides and investor side align, that can go really quickly. And it was really something noticed by the group that investment can go really quickly on that one.
Yeah. And certainly in those very large kind of regeneration or mixed tenure schemes like the one in Brazil that Sylvia was talking about, you know, and certainly we have them a lot in the UK, those rental tenures, the faster absorption rate and the kind of the creating the place much faster alongside the sales, the traditional sales stock is really important. And having maybe a bit of student or a bit of later living in there is really, really important too. Okay, fantastic. Thank you so much. Okay, Trouble, you're off the naughty step now. You have the floor. Well, first of all, did your table accord with the definition of co-living that Luke gave us on the panel, or did you try something else?
First of all, it was like 8 people on the table, 6 nations, I think, and everyone was more of an expert than I am.
Well, you know, we like to keep you on your toes.
And this is really fantastic. So here, everyone and these discussions seem to be really strong. So this, by the way, this is much better than it was last year.
We know. Yeah. I know. Who needs a Danish minister? You've got you and me. It's fine.
Exactly.
We're all good.
And the definition of co-living, co-living is originally probably just a shared flat, like many of us did when they were students. But we have had, again, so many experts, they explained so many small differences, how you can create this combination of living and community building. And then that is, of course, something that you have in PBSA, that you have in later living, and co-living is more or less than all of that. At least we did not come up with one single definition. And I was trying to find what they believe would be the premium, like your brand premium.
Yeah.
Yeah, but we were not quite sure how much premium there is. Probably if you go into the incoming yield, it's about 100 base points where the price is lower.
Okay.
That comes, of course, with the risk, because what I said, what I like so much about residential is that it's basically risk-free because the supply-demand systematic is in a way that you will always find tenants and there will always be upwards pressure on the rent. That's not the case always in operational living. We know that from students, which we're currently experiencing, for instance, in some UK schemes. And that will be clearly also for co-living might be a challenge. But you also have a chance that can go up. So roughly 100 bips upside. We did not really come to a reaction there. And then something that I did not understand. And since we still have a few minutes, Joy, maybe you can give an answer there. There are some countries in Europe that don't like co-living.
Okay.
They in Copenhagen, they even ban new schemes in co-living. And I think it's strange because you get so much better density there. If in the given space that you have, more people can live and exist. Is that something you discuss in New York City?
It's definitely a discussion. It is something that's challenging because as New York evolved, single room occupancy effectively became illegal, and the requirements for the sizes of bedrooms, the fact that every bedroom has to have an operable window and light and air, makes it challenging to cram people into some of the spaces that that people would be willing to rent and actually are renting.
And actually are renting worse quality in existing homes already.
But you already say that you're cramping people into. No one is here cramping people into rooms without a window. It's about modern ways to bring people to a flat or an apartment.
Well, you picked on something that's actually really resonant for affordable housing, which is the social resilience that comes with community. And I think that's the piece where that community building, NYCHA residents, they know their neighbors. The buildings across the street, people don't know their neighbors. And I think that's something that every building, whether you're branded as co-living or whether you're just an apartment building, really how do you tie people to community, make them want to stay and make them want to invest in that neighborhood.
And actually from a built-to-rent multifamily angle, having done that for a long time in my previous job, it's not actually about the amenity offer. It is back to the people doing, the people running your buildings, as Emma was saying earlier, who can get to know neighbours. So, or you might have a shared interest with a person in the third floor. Can I put you together? There's something you can do. And that community creation is intangible, but very, very important. I had one question for all of you, which is something that so often comes up in our kind of living discussions, which I don't think we've touched on today, but urban versus suburban or kind of even rural housing. Is that something that, when you're looking in these markets, are you only looking at core cities, when you're looking internationally, or are you considering single family housing in sort of semi-rural areas? Anybody? Thank you, Philippe.
Yeah, I think for branded residences, when we discuss Portugal, I heard about Lisbon as much as Comporta. So there is room for metropolitan, on this format, metropolitan core locations, but also for coastal, holiday, rural location. I'm pretty sure about that.
Absolutely, thank you. Tom?
Yeah, it's a common debate in later living, and I go back to a conversation I had with my parents who live in the middle of nowhere. They would no sooner move to a scheme in the middle of a city than go to Mars. So I think whilst the reality is most schemes will be built in large towns and cities, that's the reality. In terms of people's choice, there was thinking in later living that people might want to retire to the country. And again, the reverse is true. If you've always lived in a city, why would you want to move to the country? So you have to follow the consumer to some extent, but the trend is towards much more urban development.
Right.
Co-living is clearly more urban.
Yeah.
I love suburban, well-connected living areas, but that's not so much for co-living.
No, fair enough. Okay, great. Guys, we are into our last minute. So thank you all for staying and really engaging with the interactive sessions
Maybe
here.
if you could keep the thought. I have one challenge with a colleague going. And the challenge is who gets more new connections on LinkedIn during this MIPIM week.
Okay, so nobody's allowed to leave until they've linked in with Ulrich,
there is
basically.
a bottle of champagne in for me.
Okay.
I will not share, but you could really help me if you connect me or follow me.
Like, where's my premium in that? Where's my margin? Thanks. Right, so should you wish to connect with Ulrich on the way out, you may. What I was going to say is, Jessica and I put this session together last year, and I agree with you. Look, it has been even better, and last year was good, but this is even better. It does rely on you guys staying, engaging, and contributing, and actually it represents all of my favourite things about MIPIM, which is the amazing international mix that you have, the interesting people, the different dynamics, the ability to be able to tease people that you like, but also really respect. So you can actually have a really, really wonderful conversation. We have recorded this, so the reason we've made everybody hold microphones all the time is because there's so much substance here that we know lots of you might wish to come back to, and any of those who couldn't come today, you can share it with them as well. If anyone has a slight rosé head in the morning and maybe can't quite recall it or read their handwriting, you can come back to it. So it's been a real joy, but I want to just thank Jessica, who has worked so hard to put this all together. So thank you. It is, and as a true MIPIM pro, because we know, we make you stay in a dark room while it's sunny outside for 2 hours and really work quite hard, not just listen. We do have a little cocktail together, don't we, Jess? So where do we need to head for that? And it's got some outside, it's got some light. We can go. Massive sun, excellent. Sun and wine. So just let me say thank you all so much for participating. Please do, if you have enjoyed it, and I really hope you have, please do take the time to give us some feedback. Anything we can change. I hope we can come back next year. I might let it come back, maybe. I would love to have all of you back. Thank you, Joyce, so much for bringing your perspective from the US. But we would, really value any feedback you can give, and particularly to the Read Medium team. But thank you all for joining us this morning, and have a wonderful MIPIM 26.